Hi, my name is Marcus and today I'm going to talk about whether should you buy a $1 million HDB here in Singapore. The procedures and calculation will be a bit different from buying a private property, so make sure you stay to the end. Before I continue, do help me to tap the like button because it's free, encourages me to do more content like this. Thank you in advance. Now I'm going to talk about 3 things you must take note of before buying an HDB flat. Number 1, do you have the funds for the down payment, stamp duty and legal fees? Number 2, is your income sufficient to qualify for the loan? And most importantly, the running costs that many may have missed out during the calculation. Using these 3 factors, I will then share my recommendation as to whether one should buy a $1 million HDB flat in Singapore. Number 1, how much capital is required to purchase a $1 million HDB flat? This calculation is based on bank loans and it's the same even if you are buying a HDB flat or private property, assuming you are taking a 75% loan. First up, you need to know that 5% down payment has to be in cash, be it buying a HDB flat or private property. As long as you are taking a bank loan, that applies. Then the balance of the 25% can be paid using your CPF. In total, you require a fund of $250,000 in terms of down payment. Next, you also need to consider the legal fees that will cost you about $3,000 depending on which solicitor you are using. Likewise, it's pretty much the same as private property as well, followed by the stamp duty, which are taxes on documents related to the purchase or lease of properties here in Singapore. So no matter whether you are buying or leasing a property, stamp duties will apply. And it works in a very interesting way whereby the higher the property price, the percentage that they use to calculate the stamp duty will be higher. If you'd like to find out more, I will link it in the description below. There's actually a shorter way to calculate the stamp duty, which in this case, you use $1 million multiplied by 4% and minus 15,400, and that will cost you $34,600 for your stamp duty. Heading on to number 2, your loan eligibility. There's a difference between buying an HDB flat and a condo. When you're buying a resale HDB flat, you need to consider the mortgage servicing ratio, MSR, which limits your installment to under 30% of your monthly income. For MSR calculation, the loan repayment are calculated based on an interest rate of 2.6%, which is the prevailing CPF interest rate, plus 0.1%. The maximum loan tenure is 25 years or 65 years minus the buyer's age, whichever is shorter. Then the loan to value LTV is kept at 80%, which in many situations will actually reduce the loan eligibility substantially. However, you also need to meet the total debt servicing ratio, TDSR, which limits your monthly repayment to up to 55% of your monthly income. That would include your property loans, car loans, and even your personal credit card loans as well. Calculated at a floor interest rate of 4% for bank loans and up to 65 years of age. But do take note, right now banks are using a 4.75 stress test rate or medium term rate. If you're confused why the previous video I said 4.7, it's because different banks actually have different stress test rates. So if you're interested to find out more about refinancing your mortgage, do feel free to contact me. Now the question is, how much do you need to earn in order to qualify for the loan for a $1 million HDB flat? Assuming if you have a car installment of $1,400, which is what you have to pay for a Toyota Noah here in Singapore, the answer is $14,000. However, that depends on your age because your age matters a lot. For example, if you are earning $14,000 at the age of 35 years old with a $1,400 monthly car installment, you actually qualify for a loan of $795,000 to buy the $1 million HDB. And if you are 50 years old, you only qualify to get a loan of $567,000. Please note that if you are self-employed, you also have to factor in a haircut of 30% on your salary. Therefore, it's always better to buy when you are younger, as you notice your monthly installment increases as you age and your loan tenure is affected as well. Plus, your loan eligibility will be substantially reduced as you age. Basically, the younger you are, the more the banks will love you and grant you more loans. So whenever anyone tells you to buy a property earlier, it's actually good advice. As usual, please DYODD or consult a banker on your loan eligibility and stress test. Number 3, what are the running costs that you need to consider before buying a $1 million HDB resale property? There's property tax, monthly maintenance, for which in this case would be your town council charges, and also most importantly the monthly property repayment, which may vary a lot. Not forgetting season parking if you are a driver, which in some cases staying in a HDB flat will require you more maintenance as compared to staying in a private property. If you are keen to find out more on the differences between buying a $1 million HDB and a private property, do leave a comment and I will try to create a video on that topic. Before I deep dive into the actual case study, because this video took us more than a week to produce and based on our analytics, over 90% of you are not subscribed to the channel. So please tap on the subscribe button as well. Thank you. So using a Telok Blangah Heights 4-room HDB flat as an example that costs $988,000. Based on this example, the monthly installment will be $3,911, factoring the maintenance, which in this case is $72 for town council, property tax of $13 per month, and your season parking of $110. Your total monthly cost will be $4,106. Considering you will need to contribute $1,200 to your CPF monthly, that will equate to a take-home pay of $12,800. So having to pay about $4,000 over for your home certainly looks a bit scary. However, at the age of 35 years old, with this income, you'll be getting $1,260 into your ordinary account that can be used as a mortgage repayment, which equates to a cash top-up of $2,846. And after paying for your mortgage and monthly running costs, your total remaining take-home pay will be $9,954 before factoring in your other commitments and expenses. So, is that a stretch? Let's calculate the percentage of the funds allocated in this case. $2,846 divided by the take-home pay, $12,800 multiplied by 100 is around 32% of your take-home pay to your property. Meaning that you're allocating about 22% of your take-home income to your property, which is rather low compared to the previous scenario in my previous videos. And whether does it make sense to me? It does, because in Singapore, on average, the asset allocation to real estate based on bank research is about 30 to 40%. So allocating 22% of your monthly take-home pay to real estate is something that I would say is pretty reasonable. Between a private property and an HDB, the difference is that for the HDB, you need to fulfill a 5 years minimum occupation period before you can rent out the whole unit or to sell. After meeting your MOP, you are then able to rent out the unit, and in this case for $1 million HDB, the rental you can fetch, we are looking at about $4,000 to $4,500 for similar unit type. If you would like to find out more about renting out your HDB flat, feel free to contact me. I'm happy to assist. In conclusion, it really depends on your needs and priorities. If you are looking for a bigger property and you wish to stay closer to town, $1 million can get you quite a decent HDB near town. However, you don't mind living further away from town, a smaller unit, in order to enjoy the facilities of a condo, the condo would be a better option. And if you are looking to invest in a property, I would suggest a private property over the HDB flat, because HDB are ultimately subject to HDB rulings, and the government is constantly building more HDB flats in the bid to keep the prices affordable. For a private property, it is based on market rate by private developers. That might be a better way to preserve your wealth. Also, you won't have to earn $14,000 in order to purchase a $1 million private property, because you can loan up to $1.32 million based on TDSR, which makes it easier as the HDB maximum loan tenure is only 25 years. However, if you have higher monthly commitments, buying a resale flat would make a little bit more sense, as your monthly repayment can be a little bit lesser, and if you really need to, you are able to rent out your rooms to supplement your income. I hope this video will be able to give you more insights before you buy an HDB flat. If you found this video helpful, do like, subscribe, or share this with your friends, because it may be able to help someone out there. I would also like to invite you to join our Telegram channel, where I have been sharing daily property news update. Thank you for watching. See you at the next video. Bye!